Assalamualaikum guys. We look at the rising OPR and how that affect the banking business. But specifically, we are looking at the lending rate or the loan rate or the profit rate in Islamic banking. Usually, the OPR is the loan rate in the money market. So when bank do not have enough deposit, for example, then they will acquire funds from the interbank money market that are often higher than the deposit rate. And usually bank will also use this money market fund to make loans. For sure, the loan will be more expensive compared with loans funded, by CASA deposits. But then we know very well that when OPR goes up, number one, the cost of borrowing in the money market will increase. Thus, the bank would reduce their borrowing, and that will in turn reduce the loan the bank make to the public. So once the OPR goes up, bank borrowing will reduce, and therefore bank will make less loans, and that will somehow, reduce lending, and to some extent that should be able to reduce inflation. At the same time, when the OPR goes up, this increase in the OPR will be affecting the base rate, which is a component of the loan rate. So higher OPR would mean higher base rates, and therefore the loan rate will be more higher, and that will make new loans more expensive, or existing loans or murabaha more expensive, in the sense that you have to pay more money for your monthly installment, because the facility gotten from the bank are mostly floating rate product that will instantly accommodate any change in the cost of fund. So we can see that as I have mentioned earlier, that banks with high amount of CASA deposit will charge a loan rate based on the OPR, although their cost of CASA deposit are much lower than the OPR rate, but they are allowed to charge a loan rate based on the OPR or based on the 3-month FD. So for this reason, bank with high holding of CASA deposit will see their earning to go up, when the OPR rises. So we can see that for the case of Maybank, Islamic, the CASA deposit is approximately about 71 billion over the total deposit of 203 billion, and therefore it constitutes around 25% of total deposit, whereas the FD constitute about 75% of total deposit. So we can see that for Maybank, their CASA holding are much smaller than the FD holding. So we can see that the rising OPR will not be benefiting Maybank Islamic as much as a bank where the share of CASA are much higher, than FD. I don't have the case here, but in the report, we have seen Alliance Bank as well as Bank Islam were quoted to be the bank that will enjoy higher interest and profit margin due to the rising OPR. So most probably that can be due to the high holding of CASA deposit by these two banks. So that needs to be checked out, but there was no mentioning of Maybank Islamic. Maybe Maybank Islamic case is on the average, whereas the study was reporting that Alliance Bank, Afin Bank, and Public Bank were the least benefiting from this OPR high increase of this OPR hike. So at the same time, we will see that the Islamic product are now, mostly structured based on the floating mechanism, because Islamic Bank have learned their lesson since back in 1997. Most of their financing are contracted on a fixed rate contract. That's when we got the Asian financial crisis, with interest rate going up to as high as 35%, that the Islamic Bank are not able to accommodate the rising interest rate into their asset. So repricing, is not possible, because if they do, then there will be many prices in one akad or one contract, and that will make the contract of Ba'laina and ITAP to be invalid. So that will spell trouble to the bank for Sharia non-compliance. So this, the trap of getting into holding fixed rate asset, now the Islamic Bank have learned their lesson, and now since then they have introduced more and more product with a floating rate option, and now with the rising interest rate, then the Islamic Bank should be able to accommodate any increment in the OPR into their product. Thus, they will not be affected like what they did back in 1997. But then we can see that existing borrower will have to pay more, as the Islamic Bank were able to adjust the profit rate to the rising OPR. But then if the OPR comes down later on, then the Islamic product can be adjusted lower, and the borrower will pay lower monthly obligation. So that's how these floating rate products are able to ensure that banks are able to sustain their revenues or their margin. That seems to be, a better option compared with what have taken place back in 1997. Okay guys, thank you very much for your time. I'll see you again. Assalamualaikum warahmatullahi.